Hey everyone, guess what day it is? That's right, it's my favorite day of the week. It's Mortgage Tip Tuesday with It's Your Girl, hashtag who, JLoan. Guess what I am so excited about today, because whether you know it or not, October 5th is very significant for a couple of days. One, it's National Get Funky Day, so don't forget to get funky with it. As well, it's National Do Something Nice Day. So make sure that you do something nice if you don't already. Do something nice for someone, even if it's just smiling or holding the door for them. Do something nice for them or for somebody other than yourself, okay? And then today is World Teachers Day as well. So I learned last year during COVID that keeping my kids home for a year and a half, they actually just went back to school this year, that I was not cut out to be a teacher, and those are my kids. And so I just want to give a huge, huge shout out to the teachers who get up every day to teach my kids and your kids and everyone's kids, because that job is not easy to do, and they do it with such grace and passion, and in helping our kids through our future. So thank you so much to our teachers. So in lieu of Do Something Nice Day that falls on my favorite day of the week, because guess what? You know what happens on Tuesday, right? Another Tuesday, another tip. I am going to help you with some home ownership things that I want to talk about today. So one, we want to talk about rent. And rent is rising just like home prices are rising. And so I'm going to share my screen here, and I just want to show you a little bit about what's happening in the market and how we can hopefully get you out of renting so that you can purchase a home. So first, let's talk about what is going on in the market. So right here, you'll see it says another new study found that average rents across DFW have increased from $1,491 in March of 2020 to $1,536 1 year later. So that's in 2021, okay? The next thing you wanna see here is the average rent in Dallas. So for a studio apartment, it's averaged at $1,276. And then a Dallas one-bedroom apartment is averaged at $1,349, and then a two-bedroom, $2,062, and then a three-bedroom apartment, $3,686 is the average rent for an apartment in Dallas. And these are things that you don't own. And so why it's very important for me to have this conversation with you is because you don't own it, that means you pay all of that rent and you get nothing from it. And so I want to show you how you can buy your home. And one of the programs out there that I offer here that if you qualify can help you with your home dream, your home ownership dreams. Okay, so first and foremost, the number one big myth is that back in the day, you had to have 20% to purchase a home. Well, with all of the programs that are out there, FHA is at 3.5%, and then conventional came back and they offered a 3% down program so that you can purchase your home. And it's giving you opportunities for you to save such a minimal amount of money to get you out of renting into owning your own home and building equity and hopefully creating financial freedom for you and your family for your future. So I'm going to share my screen again, and I'm going to show you one of the programs that I offer here that can help you, and then I'm going to break down a home and a scenario, okay? So right now there's a program in the state of Texas called the Texas State Affordable Housing Corporation, and they just recently they raised their income limits in the Dallas-Fort Worth area. So I'm only going to focus on those, although they cover the majority of the state of Texas, because the majority of my business is in the Dallas-Fort Worth area. I just wanted to show you that their home their home income limit in Collin, Dallas, Denton, Ellis Hunt, Kaufman, and Rockwell County has now increased to $111,250. And then in Johnson, Parker, and Tarrant County, it's $101,000. What's important to know about this program is it's not household income. It's just whoever is on the loan. Where most programs are household income, meaning whether your spouse is on the loan or not, they will count their income, and which could disqualify you. So on this program, it's just whoever is on the loan. Okay, so it's very important that you speak with your best loan officer ever, which is me, so that I could evaluate your finances and your debt to income, and whether we need 2 borrowers on the loan or if we need 1. It's important to know that. Okay, now I'm going to show you their programs and the number 1 that I offer. So the minimum FICO score for their program is 620. Although I highly recommend that you're at least at a 640, and the only reason why is because it's 1, easier in underwriting. Okay, 2, there's no extra fees when you're when you're above a 640. And you get the full advantage of all the grants. Okay, so this is not just the only grant we offer. We offer other grants as well, but this one offers the most towards your closing costs and your down payment. So as you can see, there's a 3% option that the rate today, this is published public information, so I actually can speak on it. Rates today, October 5th, show at 3%, the interest rate is 3.5%. At a 4% grant, it's 3.75. And at your max 5% grant, if you were to lock today, your interest rate would be 4.125%. And this is a full grant. It does not have to be paid back. So although you see more information down here at a lesser rate, these are different grants that if you don't stay in the property for a certain amount of time, you have to pay it back. And I personally don't like to speak about those because I don't feel like anyone should be tied to anything. So on this program, if you go to this website, you can see right here, it says take the eligibility quiz, and that'll let you know if they feel that your income qualifies. But keep in mind, they do not offer you the loan. We offer you a loan. You have to go through a lender to give you the loan. They're just taking basic information to see whether or not you qualify. Okay, so again, I'm not going to go through all of the qualifications that you need for this program. If you're interested in buying a home, you have at least a 620 to 640 credit score, I think it's time that you reach out to me and let's do a consultation and see if we can get you into a home. Okay, so now you saw the average rent prices that I showed you earlier were right here. So for a 1-bedroom apartment, you were at $1,349, and in a 2-bedroom apartment, it jumped up all the way to $2,000.62. I'm a big numbers person, so most people need a 2-bedroom. So we're going to go to 2062, and we're going to multiply that just times a 2-year lease times 24 months. That's $49,488 that you will pay in rent that you will never get back. If you leave that apartment or don't pay your rent, they'll kick you out. You won't get any amount back, okay? Not to mention, most places require not only your first month's rent, but they offer a security deposit, which is 1 month's rent. And then sometimes they'll want first and last or a security deposit. So let's just say they want 1 month's rent and a security deposit of $1,500. And that's if you have no pets. So out of pocket, right up front, before you make your first rent payment, you need about $3,500, okay? So I went online, of course. I found a property. I just picked any property. This one's on Zillow. This property is a 4-bedroom, 4-bath right here, and about 1,700 square foot home, okay? The pictures are on here. Pretty decent looking home, 4-bedroom, 4-bath. Here's the address right here, and that sales price today is $206,000. Now, I do want to show you something because I don't want you to get confused, because you see how it says estimated payment $1,145. Zillow always bases that on the fact of how much money you're putting down, okay? And it always is going to estimate that at 20% down, okay? So don't go by Zillow, because I just talked to you about programs that don't require 20% down. So although you would love to have that monthly mortgage, that might not be yours. Okay, but they do provide a decent amount of information that is pretty helpful. So I did the breakdown on this property. I did go research the property taxes on this property. And then I want to show you as well the equity that you will build in this, the person who owns this home. So let's just say right here, if you see your taxable value in 2017, what they paid taxes on was $36,000. And 4 years later, the city is estimated that the same property is worth $100,000. So this person has gained almost roughly about $65,000 in equity that they would not have if they rented a home. So they could sell this property and make $65,000 just based on the assessments from the county. Okay, so keep that in mind as well. It also, everything is public information. It shows you the estimated taxes right here at the bottom for this property, which is $2,726.17. Okay, so of course, you know, I already have the breakdown done, so I'm going to show it to you. So the purchase price of this property is $206,000, and the FHA rate today that I showed you, based on T-Shacks with 5% grant help, that's the max that they'll give you, is 4.125%. Again, these public rates are found at this website right here, and they are posted daily, and they do change all the time. So keep that in mind. Today's rate may not be offered tomorrow. Of this $206,000 on an FHA loan, your required down payment is $7,210. Now, that's just your front end. Your back end is that you have closing costs associated with your loan. You have your lender fees, your title fees, your escrow account setup, and all third-party fees such as appraisal, credit report, document, attorney review, things of that sort. And those are estimated, I'm just estimating here, around 3%. Okay, so of that purchase price, that's $6,180. If we add your down payment and your closing costs together, this gives you an estimate of $13,390 out of pocket if no one were to help you. No grant, no gift, no seller, nobody's helping you. If you wanted to buy this home, you would need approximately $13,500. Okay, but what this grant says is if you qualify for this grant, which is why you have to call me, we'll give you 5% of your loan amount. So of this $13,000, they're going to give you $10,116.50 towards your down payment and your closing costs, which leaves your out of pocket to $3273.50. Now, if you remember my example on your first month's rent and a security deposit of $1,500, that left your out of pocket on your rent at $35.62, and you were getting ready to pay $2,000 a month for a 2-bedroom apartment. Okay, so let's break down your monthly payment. Your principal and interest at 4.125%, again on a $206,000 home with 3.5% down, is $980.59 a month. Okay, I did estimate your monthly insurance because I don't know who you're going to choose. I don't know if you like Farmers or if you love Goosehead or State Farm or Progressive and what coverages you want. So I'm just estimating here what your monthly insurance will be, and that's $150 a month. Then you have the taxes on the property, 1/12 of the taxes of that $2,700 tax bill that I showed you, and that's $227.18 a month. And then, of course, on FHA, you're going to have something called mortgage insurance, and you also have this on conventional loans where you put down less than 20%. Now, mortgage insurance, of course, doesn't protect you. It protects the lender because statistically, if you are not contributing 20% or more, your likelihood of default is higher. So there's insurance in place in case of that default. That estimate is $143.32. So if we add principal and interest, monthly insurance, taxes, and mortgage insurance, your estimated monthly payment on this 4-bedroom, 4-bath house is $1,501.09 a month. So I tell you, you can go rent and invest $35,000 to $4,000 just on your security deposit in your 1 month's rent, and pay $2,000 a month, or you can look into purchasing a home, seeing if you qualify for a home buyer's grant, and paying roughly $1,500 a month, and estimated on this particular property, this borrower would come out basically $3,200. So my whole goal here is to teach you that there are ways that you can purchase a home that are out there, and it all starts with a phone call. You gotta get rid of the fear. We all fear something, but you have to get rid of the fear, because every time you pay your rent, you're either paying it for someone else's benefit so that they can pay off their home early, or you're just paying it to someone that's just a collector. All they do is collect it. And I would love to put your family in your own home so that the kids can jump on their bed and scream as loud as they want. You can build your garden in your backyard. You can do your landscaping, plant trees, put a pool in the back, paint this house however you want, because it's your own. And if that's your goal, and if that's something that you're looking for, and this was helpful, comment, inbox me. Let's get together. Let's do a consultation. Please share this with your family, your friends, your business partners, and let's see if someone you know who's renting, we can get them and their family into a brand new home. So I hope that you have a fantastic day, a fantastic rest of your week. Of course, I want you to be safe, and I want you to be blessed. Until next Tuesday, have a fantastic week, and don't forget, it's National Get Funky Day, so get funky with it. Talk to you later. Bye-bye.